Hey guys, Mike here. So, boy, what a dud of a day on Friday, but hey, next week is going to be huge. Not only do we have FOMC, you got 4 of the big mega caps reporting, 3 on the same day. And so we're going to do that video tomorrow to set up the week. So it is going to be a busy one and a very volatile week. But of course, you know, if the market, God forbid, goes down a little bit, people freak out. It's like, oh my God. But again, that's why I was sitting there pointing out the 7-day move up, almost 8-day move up. Is a big move, right? So you got to either have consolidation or come back down and set your higher and low, which we'll talk about today in this video because you guys asked some good questions about Tesla's premium, about what kind of sectors and stocks perform well under President Trump and this administration, which we'll talk about and really elaborate. And I'll kind of give you a glimpse behind the scenes of you know, it's not so much the president is what's happening right now in the market and what he definitely cannot afford to happen, okay? And so, but I do want to start off with this right here, and feel free to participate in the comments to answer some of these. But you saw this come out Friday where corporate insiders dumped shares at record pace amid S&P 500 rally. And they was, oh, well, this is super bearish that they're dumping like this and all this fun stuff. But guys, as I showed you with Palantir's executives, right, dumping just hundreds and hundreds of millions of dollars worth of shares. Remember, they are giving these stock options like cookies as part of their package, right? And all of a sudden, the stock goes up 100, 150% in a very short amount of time. And you're sitting here with all these stock options. Of course, you're going to sell. It is life-changing money. It is generational wealth they're creating by doing this. I'd be dumping like crazy too. Not just Palantir, all those stocks that are going to the moon. Yes, of course, you're going to dump. I mean, because why? You're going to be getting a whole lot more in the future anyway. If the stock goes to 100, you're going to have more options to exercise. If it comes down and then makes another run, you know, they're going to have more to exercise. So doesn't mean it's bearish because executives, and I've showed you the chart before to show that, oh my God, the market's going to crash or that stock's going to crash because the executives are selling. No, they're just doing the right thing. They're doing the smart thing. I mean, wouldn't you? If you're sitting there going, wait a minute, I can sell this and make, you know, 50 million, 100 million, 200 million dollars right now. Yeah. That's generational wealth. So yes, you would, you know it, okay? Because you're going to get more issued to you. That's just the way it is. That's how it works in the corporate world now. So let me know what you think about that. Now, first question here says, a question for Saturday. Where did the option premium for Tesla go when we see lots of options for 500 strike in November, December, loss for big guys? The answer is most likely no, because one thing you got to remember is, and I forgot what the exact numbers were on the Tesla chart, but you know, yes, a lot of people are buying the 500, but when you saw the move from November 5th going into December, remember that's just not people buying it. There are people selling, right? Because people who have the Tesla shares, what they do is they make a lot of money doing this. Let's say you have 100 shares and it's setting at 425, whatever. And the IV was crazy, and the premiums were crazy on Tesla at that time when it was ramping up. So they'll see the 500 and say, hey, I'm going to sell this, collect a lot of premium. If it gets there, of course, I'll give away my shares at a massive profit, and I get to keep the premium. If it doesn't get there, I just get to keep the premium, and they'll just keep rinsing and repeating this. Okay, and so that's what you have to remember. Plus, if you're buying the 500 and Tesla goes from, I forgot what the exact numbers were here, goes from 400 to 470, your 500 calls looking sweet. They're selling. Most people are not going to hold. It doesn't have to hit 500 for you to make money. Okay, so they're buying out of the money call options here because they're cheaper, but it can run up and they still make money. Okay, so no, I'm pretty sure they didn't lose money. A lot of people made money on that stuff, and so that's just how it works. So it's not just buying. People are selling. Remember, somebody has to be selling for you in order for you to buy the option. And so there's a lot of sellers too. Some people, that's all they do. They never buy options. All they do is sell options, collect premium. That's what they do. And some people are very good at it, really good at it. Now, next one here says, hey, how come you never talk about crypto? Could you give your thoughts on Bitcoin and some other major altcoins? And the reason why I never talk about crypto is because there are crypto channels. And so, you know, why not listen to them? But looking at the charts here, you know, here's a chart I put in our Discord the other day, and I said, this line right here, man, this is a big one. This goes back to, I guess it'd be 2 crypto cycles ago, and it's ran into it twice during this cycle, and you can see every time it hits it, we end up getting a sell down. The last one was, I think it was 18% or something like that, but it just can't get above that line right there. So that's a big one, right? So mark that out for yourselves. And when it does, you know, you can see a nice little explosion there probably. And again, if it comes down, you got to hold this area right here. But the big thing when I'm looking at on Bitcoin, at some point in time, that gigantic fair value gap, when we switch over to a larger time frame, is going to get dealt with. I mean, you can go to a monthly. Look at this thing right here. Look at that huge fair value gap. You go back and look at Bitcoin's chart. They always get dealt with at some point in time. Might be the end of the cycle. Might be, you know, we usually do get a really good pullback in the middle of a cycle. We hadn't really had a huge one. And so I'm looking at that. Again, it could happen at the end of the cycle. And, you know, looking at some other ones, this cycle is so weird because look at Ethereum. Oh, boy, what a waste. This thing hadn't even come close, really, to breaking the previous cycle's all-time high. Isn't that amazing? I mean, I said Ethereum will never get another penny from me. Unlike Solana, when you pull up Solana, obviously, this one right here not only broke its previous all-time high not once, but twice. And so, you know, you look at that one, it's a much, much healthier chart than Ethereum is. And we'll kind of talk about the cycle in just a second and how I look at this. But, you know, this is a much healthier chart. And of course, you know, there's others out there that are doing well too. And, you know, getting to, you know, why I think this cycle is just completely weird. And of course, each one of them change. Each one of them are different. I did a whole members video on that, by the way, that they're different. You know, but looking at this one, is it going to hold? Or are we going to, you know, go to a shorter time frame on Solana and see more of a breakout? Obviously, when Trump launched his meme coin, it was on the Solana network. So that really pumped this back up. And so we'll see. I mean, I think obviously that trend line break, we're going to come back down again, probably around 210. But when I pull out and I say, okay, where can Solana go? I'm curious what your targets are, because my top target would be like 413 according to the fibs I got on here. But I'm curious to see what yours are. But what makes this cycle so weird is normally, you know, you're going Bitcoin, then obviously they take profits. It comes down to Ethereum. Ethereum starts to ramp up, so the other alts, and Ethereum breaks its all-time high and goes. And then all of a sudden, profit starts going from there into like the smaller projects, meme coins, that kind of stuff. But with this one, it seems like money is just moving from, you know, like now you got all these different, one, there's too many coins as far as I'm concerned, because anybody can launch a meme coin now. But there's just, you know, why each cycle is different is because obviously you have Bitcoin in the first one, then you got Bitcoin Ethereum, then you got Bitcoin Ethereum, Solana, Doge, all these other ones coming up, and now you just got, you know, like millions out there. And instead of going in like a smooth cycle, now it's just all over the place. Like Bitcoin, take the money out of there, it ain't going to Ethereum, that's for sure. We'll go to Solana, and wait a minute, we'll go to this meme coin, or wait a minute, we'll go to the AI sector, wait a minute, we'll go to the gaming sector, wait a minute, we'll go to real world asset sector. And so I don't even know if there's going to be like a real altcoin season where it absolutely just everything lifts and goes to the moon. I hope there is, but at this point in time, it just seems very strange. Like there's just certain projects that are doing really well, and they'll pump, and then they'll kind of come down, but they don't crash or anything. And these others, they're pumping, and they're just crashing and burning. And so, you know, we'll see. A lot of people are calling for a big move up on the AI coins, and then of course gaming is a big one. Real world assets are like your top three. But we'll see, and that's where you better hope the stock market stays up, because if the stock market goes down, crypto's going right down with it. That's just the way it is. So, but if the stock market does well, crypto should continue to go. So that's what we got to pay attention to, and we'll get into that in just a second. I'll talk more about that in just a minute. But that's just my thoughts on crypto. Let me know your thoughts on it. Next one here says, hey, Mike, what stocks and sectors do you think will be the most affected by Trump's policies this year? And let me be very clear about this. Presidents don't determine the direction of the stock market. Okay, that's just the way it is. We've had terrible presidents. We've had good presidents. Don't matter. The biggest thing about not just the president, but the Congress is to stay out of the way and to not decrease liquidity. That's really a big thing. Okay, so for example, if Trump does tax cuts, right, that's more liquidity. That's more liquidity and more money in people's pockets, which means that's more money going to the economy and more money going to savings, the stock market, all that fun stuff. That's if he decreases corporate tax rates and that kind of stuff. That's more liquidity. That's a type of liquidity. It's no different than when Biden started forgiving student loans and then saying, don't worry about paying your mortgage, don't worry about paying rent. Where's that money going? It was going into the stock market, into the economy, all that fun stuff. And so the other one, though, which the president can't control, like he said, he's going to demand interest rates come down immediately. He just said it the other day at that big conference. And so guess what I told you? Jerome Powell better have his psychiatrist on speed dial, because every day he's going to be getting hammered, just like he did back in 2018 to him, and eventually he folded. And so I'm expecting the Fed's going to fold again. That's the way it's going to be, because they're going to be under immense pressure to cut rates. And that's just the way it's going to be. What the president doesn't understand is the Fed controls the short end of the curve, 2-year and all that stuff. They don't control, as you've seen, 10, 20, 30-year yields. They don't control that. There ain't nothing they can do about that as far as I know. But so they don't control that part. They control the savings rate, which is why you still getting those emails and seeing your savings account rates going down. But they can't control the long end. The 10-year currently is kind of stuck where it's at right now. It came up a little bit, but all of them are saying, one, we need more money or more yield for taking on this debt, and two, not sure you got things under control, buddy. Okay, and then this whole premise about how the Fed might raise rates. Do you laugh at that? I can't help but laugh. I really, even if it needed to happen, I can't imagine them doing it. I really can't. I mean, look how long it took those idiots to raise rates when inflation was skyrocketing out of control. I mean, look how long it took them. You think they're going to be like, wait a minute, did we just go from 2.4 to 2.9? Really? We went from 2 to, what was it, up to 9 something? And they were still saying, going, I think it's still transitory for months. And so I'd be stunned. I would be stunned. So, if I'm looking at this, it's not so much what the president's going to do. It's looking at what's happening now. How is the market reacting? What's breaking out? I would just create a watch list like I've showed you before and just start going down and saying, well, fintech's looking pretty good. It's not selling off. And there are certain industries that could do if its policies enact and Congress passes them and gets behind them and does what? Funds them, like you see liquidity going into these things, like as far as manufacturing and stuff. But I'll show you this cycle is the real important thing that needs to take place for any of that stuff to happen. Utilities will probably still do well because why? If the AI thing happens and all that $500 billion gets raised, start putting into this stuff, and they really need this energy, utilities are probably still doing well. Communications, been looking pretty darn good right here. The travel, as far as like jets and all the rest of them, that depends on the economy. A lot of this stuff's going to depend on the economy. If it stays up and we stay strong, that's just kind of the way it is. But you can see with communications, it was doing well coming up into this and seems to be rebounding again. Again, man, I'll tell you what, the stocks, as far as the planes are concerned, oh my goodness. United Airlines trades like a meme stock now. XLP, when you look at this one, this is discretionary. This is staples. This shouldn't do good as long as the economy stays good. It never does. Staples do best when things are going really bad because that's when money flows into it because they know we need it, right? Cybersecurity should do really well. It's been doing well. Should continue to do well, you would think, under the administration and this Congress, right? Financials is another one you would think, especially, I mean, we already talked about fintech, but the normal banks, they're going to make their money. And if all of a sudden you start to see more deals being made and more IPOs and all this fun stuff happening, then the bank should make a lot more money on that one. You just heard them talk about that during the earnings, right? Cruise is another one. Depends on the economy, okay? This one, healthcare has been beat down. It does best when times are bad. It looks like maybe it's trying to do a breakout here. There are some AI plays in the healthcare that are doing really well, so I would really focus more on that. If you're looking at that, the Mag 7, all these guys paid homage. They went up there and kissed the ring. They wrote big checks to the president, and especially for his campaign and stuff, for his inauguration. So I don't see him passing anything that's going to hurt him, and he don't like to hurt the stock market. And so I definitely think these, we'll see what happens. We got earnings coming up next week, so that's going to set the tone, right? Transportations, your railroads, all this fun stuff. Again, I'll show you a chart in just a second that's going to dictate this, but if that chart turns up when we start coming into expansion, then yeah, everything's looking good. Materials, industrials, if he gets what he wants in manufacturing, we actually do start to see manufacturing increase and things like that, then these should obviously do well too. But the big thing to look at on this one is this right here, the cycles, right? So ISM manufacturing new orders, you can see it's coming out of contraction, which is below 50. And so again, he's running cycles, right? So if this turns back up, money starts flowing into this, then boom, here we go. This is ISM Purchasing Managers Index. It's in contraction, been in contraction for a while, but you can see how it goes. And if you pull an S&P chart over this, when it's heading up out of contraction, the market really does well, especially a lot of those stocks we just talked about. So hopefully that makes sense and helps out, okay? Now, next one it says, why do you want to see a lower high on the SPX? It's not that I want to see a lower high, it's that it's going to happen because that's market structure. That's the way the market moves. Look at this. High, low, high, low, high, low, high, low, higher, high, higher, low, right? That's the way the market moves here. And so right now we're just going on this crazy move up, but eventually it will have to come down and it will set. See that move? That kind of looks what we're in now, right? It will set a higher low. Okay, that's the point in it. So it's not that I want it to come down or anything like that. That's why I can't say and go, here's where it's going to set its higher low at. I don't know. But, usually what happens, you get a big move of this, you make a consolidation, then you get a move down for a higher low, and then boom, away we go to go ahead and set a new higher high. So it's higher highs, higher lows, higher highs, higher lows, okay? Or lower highs, lower lows when we're moving down. And so hopefully that answers your question. Next one, here comes Dr. Marcus. Realistically speaking, with the Mag 7/8 basically at or near all-time highs, with them comprising like 34% of the NASDAQ, can the NASDAQ really pump and continue up all year with just the other remaining stocks leading the way? Or will the Mag 8 have to carry most of the weight for NASDAQ to achieve 10 to 5% annual gains? Because we have rely on Mag 8, it definitely gets me a bit nervous. And when you break this down, you're talking about NASDAQ, we're talking about in a minute, we'll talk about in just a minute, but you know, S&P 500, right here, 34% is made up of Mag 7, 36 if you count Avgo in here. And so can the SPY continue up? The SPY actually obviously has a much better chance, and the reason why is because as long as the Mag 7/8 don't crash and continue to move up, they don't have to set records or anything, and the other technology sectors, you know, got to do with AI and things like that, move up, it should be fine. Is it going to set records? Probably not, because when you look at it and you add up financial, consumer, and healthcare, that right there, add those three together, it barely, you know, cracks the IT percentage, right? And so you're going to need tech no matter what you do, whether it's in the SPY. And of course, you talk about with the Qs itself, the Qs have no shot at doing anything like that without the Mag 7 or Mag 8, because it's 45% Mag 7, 47% when you count in Avgo. And so, yes, you would have to have moves up in those 8 stocks in order for the QQQ to actually move up. And the NASDAQ composite will stand a better chance. There's a lot more stocks on the NASDAQ composite. But yeah, I mean, if you look at any time we've had great years, it's when these stocks are moving, because they account for such a big part of the earnings. And so, yeah, you need those to do something. Next one says, hey, Mike, who is trading in the U.S. stock market between the extended trading hours? A lot of traders, a lot of different countries and everything are doing that. I will say this, though. It was funny. Stock trading goes dark. I put this in our Discord the other day, and it just came out Friday, and it says off-exchange volumes in U.S. equity market surpasses 50% for the first time. And you see that line crossing. That's the first time it's happened. This goes back to 2000 right here for off-exchange versus on-exchange. And when you look over here, there's this article, and this is why I put those dark pool levels in. I'll start mentioning them a lot more too. But it says, for the first time on record, the majority of all trading in U.S. stocks is now consistently occurring outside the country's exchanges, according to data compiled by Bloomberg. This off-exchange activity, which happens internally at major firms or in alternative platforms known as dark pools, is on course to account for a record 51.8% of trading volume in January. Barring an unexpected dip, it will be the 5th monthly record in a row and the 3rd month running that hidden trades made up more than half the volume. In other words, the shift appears to be developing into a longer-term trend and quite possibly a permanent one. Theoretically, the more trading that goes off exchange, the fewer orders there are on exchanges competing to determine the best price. That's the big one, by the way, is having to get the best price. More volume, better prices you get. And now this going off there, that's what would really affect traders and regular people trying to buy stuff and everything. But I just think that was fascinating. And I'll definitely start putting more of the dark pool level in there for you guys, because I think it's going to be a much bigger deal. You saw the other day with that one level I kept putting in there. Last one here says, can you share your TradingView settings for RSI, stochastic RSI? Another question, when do you use SMA versus EMA? I see you use them intermittently. Not sure if it's stock specific. Thank you so much for all your videos. They are full of information and insight. Thanks, I appreciate that. And I don't change my RSI or stochastic RSI settings. I just use what TradingView gives me because it seems to work. And so I stick to that. When it comes to EMAs and SMAs, it's exactly that. It is stock specific. I mean, obviously the 100, 150, 200, 200 weekly. I mean, I use SMAs for that. But like NVIDIA, 21 EMA. Some people do use a 20 SMA. And so it is definitely stock specific. That's kind of how I work it. And then, of course, I mean, if you're doing like day trading or something, I would definitely go with EMAs, not SMAs, but because the EMAs are going to react faster and stuff. But, you know, yeah, it's definitely stock specific for me. And I mostly use the SMAs, if you've seen, but there are a few EMAs I put on there and stuff. But hopefully that helps. Definitely let me know if there's any more questions. Put them there for next Saturday's video. Feel free to give me your input on some of those questions as well. Try my best to research these things up for you and give you the best I can. Again, it's one of my favorite videos because I learn stuff too. So anyway, we'll set up tomorrow, we'll do tomorrow's video set up next week, that is. And it's going to be a busy one and a crazy one next week. You can bet money on that. And again, the FOMC and the Mag 7, they'll set the tone going forward, and we'll see what we got going on here. So hope you guys have a good one. Please hit the like and subscribe button on your way out. Think about signing up for the membership, less than a McDonald's combo, and that's everything you get with it. And I'll see you guys tomorrow.